So we're here at the S&P 500 looking at its chart. Like I said, it clawed its way back from the lows today. It tried to break the 100-day even briefly, and it's hammered its way back. This is a constructive sign. You can zoom in and see the wick is twice as long as the candle, so that's a hammer if that holds today. And it's hammering at the 400 price, which is a whole number and a key psychological level. And it's also hammering on the 200 and 100-day moving average, which I told you is very significant. The RSI is trying to bottom at 40, and the MACD could cross back up to the upside. So the market is looking constructive, and I want to buy, like I said, and load up on things before the train takes off from the station, before the market returns back to its old highs. So we're at 215,000 in debt. What can we add to that's still attractive and cheap? So PFFA, one of our old favorites. We were talking about this fund on our oil and gas video about how I had to switch from volatile oil and gas investments to preferred shares because the owner of this fund, Jay Hatfield, reached out to me and told me if you're going to run leverage like I do with margin, I should buy securities that go sideways, like preferred securities. They have less volatility than the market. You see how this is generally a very boring, mundane name that just goes sideways. So if I'm going to have all this leverage, I might as well do it in something that goes sideways and not something that's as volatile as oil and gas, which was at the time AMZA. I was in pipelines, which is actually the safer way to play oil and gas, but it's still volatile nonetheless. PFFA was less volatile. PFFA, by the way, is leveraged. So it's going to have a little more volatility than the index itself, which is PFF. So as you can see here, PFF, it's just a very solid, steady investment. Yes, it moves higher over time too, so you can get those capital gains. But as you can see, it's had a huge pullback as the market had a rough 2022. Bonds and preferreds and all asset classes got hit really. So PFF, this is the index that PFFA follows. And again, PFFA is a preferred shares ETF. It owns companies, but instead of owning the bonds, it owns the preferred shares, which have the second rights, which have claims to the assets before the stockholder. It has its advantages to own preferred shares. And again, the securities generally move sideways. So when we employ the leverage that we do, we want sideways movers. So I really appreciate Jay Hatfield for teaching me about that as I run this amount of leverage. So it's had a pullback from 22 to roughly 2058. That's a healthy pullback. This is a gift in my opinion. It was overbought. Look at all the volume that's come in. So I want to add 3,000 at least to PFFA. It's off the highs. And one more thing, when you go back to PFF, you see that PFF clawed all of its losses back from 2020. So even though it fell huge in 2020, it came all the way back and then some, as you see here. So I want preferred shares, and this is probably going to claw its way back to 40 as well one day, PFF, but it doesn't have as large of a dividend as PFFA. So I want PFFA for the leverage. The leverage can hurt you on the downside, but it can help you on the upside. PFFA also clawed its way back to almost making it back to its old highs. That's good enough. It has leverage, so there are some losses from the leverage, because as the market falls, the losses are magnified. But it did a good job again of clawing its way back to 25. So it's probably going to return back to 25. This is something you can put a lot of money in and feel safe about. Interest rates don't affect preferred shares as much as other asset classes, so you get some security there. It's moving. It's up 0.69. We have 7,000, so let's do 5,000. We'll make it an even 12. I wish I could have more in this fund, but we already have so much leverage on. So buy 5,000 PFFA. So yes, our margin is going to increase now from 215 to 220. So 220,000 in margin. That means that we have to pay a higher amount of interest now, but the interest that we're charged is 5%, and what we're making in PFFA is 10%. So it pays me to stay in margin, as I always say. The key is this available for withdrawal number threatened? Am I close to a margin call? When that reaches 0, you're at a margin call. So I like to stay comfortably above 100,000 on this equity number to always know where I'm at and to manage my risk. And so if I'm over 100, I'm comfortable. We still have 500,000 in purchasing power. The account value doesn't matter so much, 400,000. Either do these days gains. All that matters are our income and dividends per year, which is 97,000. Now we're at 98.3 after that buy from PFFA. So we're gradually increasing our income on these dips. And you see these other funds that pay, substantially, 2,800, 2,700 a month. This is the Cornerstone. These are 4-star funds on Morningstar. Go see our wall on Cornerstone. We've done tons of videos on this, 20% monthly dividends. And so we're adding to all these, and wherever we find our opportunities, we're adding to things. And PFFA was just the opportunity that I saw. There it is there monthly. It pays about $100. So it's not much, but when you add up all these together, it comes out to about $8,000 or $9,000 a month. Some of these pay quarterly, so some months are more or less than the others. And so the strategy works. I always have to end the video and say that, check out our performance. We're up 19.4%, beating the S&P and NASDAQ. NASDAQ's up 12, the S&P is up 6. So we're beating the market with this strategy. We also get handsome days gains, as you see here, 5,000. We also get nice losses in a day. We've lost 30,000. We were at 380 earlier today, and we were at 420 a little over a week ago. So we've lost 40,000 in the last week, but we don't look at that. We just keep our performance in line, 0.85, and every day, that takes care of itself. Overall, you'll see your performance be at around 20% like we're seeing, and it beats the market, which you can see up top, the NASDAQ and S&P. As long as those percentages are in line with my percentages, that's all you want when you're running this amount of leverage. So anyway, that's what we did today. We added leverage, but we feel comfortable doing it in a fund like PFFA. Look into that fund yourself. It provides less volatility than other funds while still paying you a 10% monthly dividend. Thanks.